A global shift is underway. BRICS nations are pushing for a gold-backed digital currency. BlackRock's Bitcoin ETF has exploded past $70 billion. And the US government? They're sitting on a crypto stockpile worth over $5 billion. Is Bitcoin quietly being positioned as a geopolitical counterweight? Let's break down the facts. No rumors, no hype. You're watching Crypto Watch, news and analysis for the decentralized future. Subscribe and tap the bell, because we go deeper than the headlines. As of July 2025, BlackRock's iShares Bitcoin Trust, ticker IBIT, has officially crossed $70 billion in assets under management, becoming one of the top 10 ETFs in the US by size. BlackRock CEO Larry Fink has gone from calling Bitcoin an index of money laundering in 2017 to describing it as digital gold in recent interviews. Why the flip? Because institutional money is now flowing in like never before. Retirement accounts, pensions and hedge funds are adding Bitcoin through these spot ETFs, not by buying on exchanges, but by holding paper exposure, insured and regulated. This shift gives Bitcoin massive mainstream legitimacy, but it also funnels more of it into the traditional financial system, where control is tighter and surveillance is real. Did you know the US government is one of the largest single holders of Bitcoin in the world? That's right. Through seizures related to darknet markets, criminal investigations, and cybercrime operations, federal agencies like the FBI, IRS, and US Marshals Service have accumulated over 200,000 BTC. At today's prices, that stash is worth between $5 and $6 billion. This Bitcoin is held in cold wallets under federal custody. It's auctioned off occasionally, but most of it is still sitting idle. So what's the plan? Will the US sell it, or hold it as a strategic asset? There's no official answer yet, but many economists are now openly suggesting that Bitcoin could be treated like gold, as a reserve hedge against inflation or dollar risk. Meanwhile, halfway across the world, the BRICS alliance, Brazil, Russia, India, China, and South Africa, is working on something that could disrupt the entire global financial order. A gold-backed digital currency. According to public statements and regional media, this new project aims to bypass the US dollar entirely in international trade. Think of it as a blockchain-based commodity currency, one designed to rival SWIFT, the dollar, and potentially even Bitcoin. A report from OM5, Official Monetary and Financial Institutions Forum, says, this move, if executed, would challenge the dollar's dominance and put pressure on the US to either adapt or lose influence. Enter Bitcoin. Some analysts believe that the US might lean into Bitcoin strategically, not just as an investment, but as a tool to compete globally, a transparent, uncensorable, and finite alternative to centralized, state-issued currencies. While Bitcoin adoption grows, so does government oversight. In April, the IRS finalized new reporting rules for digital asset brokers. Beginning in 2026, anyone facilitating crypto trades, wallets, exchanges, even certain developers, will be required to report customer trades to the IRS. These aren't laws against crypto, but they lay the groundwork for a divided ecosystem. Regulated Bitcoin held in ETFs, with tight oversight. Unregulated Bitcoin in private wallets, which could face higher scrutiny or tax burdens. As attorney Jake Chervinsky recently noted, the real battle is not over whether Bitcoin survives, it's about how much freedom Bitcoin users will retain. So while institutional Bitcoin looks shiny and safe, self-custody and decentralization may soon require more vigilance than ever. Bitcoin is no longer fringe, it's in the hands of Wall Street, in the vaults of the US government, and on the radar of global superpowers. The question isn't if it matters. The question is, who controls it and who benefits? Drop your thoughts in the comments, subscribe, and follow Crypto Watch for more truth behind the trends. Stay informed, stay decentralized. This is Crypto Watch.